The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we've got a market that's got a little bit of rock and roll, a little bit of country out here for everybody. A little bit for bulls, a little bit for bears. Mostly it's been for bulls most of the morning, then for bears just after lunch, and now indeterminate. We are at 2062 on the S&P cash, which is a quarter higher. Went to 2058 just a few minutes ago. 2.7 billion shares. I'm not really surprised that we pulled back. I don't know if this means a great deal just yet, but certainly we had some massive runs in some stocks where we were watching. I was watching $3, $4, $5 runs, $2 runs, and some that were just out there rolling stops this morning. And now that we're back here to the unchanged level, it's probably going to be fairly interesting to see what goes on from here. It just looks like there's not a lot of impotence to go higher, not a lot of impotence to go lower, a slight bias for higher. But it's going to be kind of tough for anybody that bought today or anybody that covered if the market closes a little bit lower to put a smile on it. Yeah, but it certainly looks to me like there was a little bit of lipstick being put on some positions out here today.
Let's put some lipstick on this pig.
And they certainly tried to do it. As always, and we'll get into some more things in a second, but we like to start off with a little bit of histoire.
That it's all just a little bit of history repeating.
On this day in 1917, just 3 days after President Wilson's speech of February 3rd in 1917, which he broke diplomatic relations with Germany and warned that a war would follow if American interests at sea were again assaulted, a German submarine torpedoes and sinks a passenger liner, the California, off the Irish coast. And if I'm not mistaken, this California is one of the ships that showed up in the sinking of the in the Titanic. I'm pretty sure this is the exact same one. And so pretty famous. You don't want to be too famous as a ship. You want to be noted, but you don't want to be famous or infamous. But it kind of interesting, but this was the incident that really pushed everybody in the United States over the edge over the next week or so. News reports came out about U.S. passengers that were killed. I think 5 instantly and maybe another 40 or so people drowned within sight of the coast, by the way. The submarine commander was kind of left out to hang out to dry by the German military, and that they said they didn't give him the order. After the war, they did find out that plainly he was given orders to sink it. And when they've gone back out and looked at those ships, by diving on them later, found lots of ammunition in it. And it looks like some spies on the docks were saying that small arms rounds were going in to the ship to help the English and the French out against the Germans. And that's why the Germans sank her. And probably not a whole lot else going on, but a lot of times it's one of these little things that determines the end of a war, in the fact that both times Germany probably could have won if they would have just left us out of it. But they kept pushing and pushing. If they would have just incrementalized, kind of like ISIS or the Iranians, and just took an inch every day, normally you won't find a politician with a spine until someone's made to stand up. And maybe a good parable for today, if we could find some politicians with some spines. I always thought that that would make a wonderful protest, which is just to stand out in front of Congress with, like, I wouldn't be real people's spines, but, plastic spines, probably from China, and wave the spines around with a dollar sign on them. Oh, spines for $1. And maybe even throw them at the politicians. Maybe they could tape it to their back so they could actually stand up straight and do something right for once. But I digress once again. Anyway, I know everybody else is going in rather interesting. But see a lot of stocks that were up much higher that had no volume. I was looking at the IBB earlier, and the thing was up at about 322 with about 150,000 shares on the day. It's off now $1.90, almost $5 lower, and it has 600,000 shares. So, you could get right into the middle part of the day with no volume before this thing started to move. And we'll see what happens out here. But I thought probably the most interesting thing today was that I thought the lack of volume yesterday had to do with everybody waiting for these job numbers this morning. And certainly we did get them. But I think there's only one thing you really need to be watching today, and that is the dollar index. This thing ripped through and blew apart almost like a torpedo. Gold prices. Right now, we've got gold off $27.90, the move, and the energy down here makes me think we're finally going to get that test of 1180 that I've been looking for again. And maybe if we get down here and we get light volume, maybe this is the time. I'll be looking at it, but I think we've got at least risk for $50 lower in gold, and that's probably just on the strength of the dollar. If anybody was sleeping through it at 8:30 this morning, we had job numbers, massive revisions in the last two reports, plus a fairly strong one. The job numbers have, out of the last 10 years in January, have massively disappointed. And when they didn't today, it was kind of an instant move in the dollar. We've also had some other stuff going on out here, but let's see what the dollar index is right now. $94.73, so up 1.25%, up $1.16. And of course, if you're not familiar with the dollar index, it is an index of 6 different currencies against the U.S. dollar. Canada, Australia, Japan, I think the euro, used to be Germany, but and maybe it used to be more. I can't remember now. I'm starting to forget stuff faster and faster in the last year. This has been one big week out here, from going to Gasparilla on Saturday to going out and having a big day sailing on Sunday, to getting into this week, to my girlfriend changing the calendar on my computer to remind me that Valentine's Day was coming faster than I thought, only to make me do an entire show thinking expiration was next week. It's kind of tough, but just the total lack of sleep since probably last Friday as these markets started to move faster and faster. I'm looking for an uneventful weekend as we move on. Anyway, of course, the Standard & Poor's came out and downgraded Greece again, only throw Greece in the grease. And who knows? It's tough to see, but my guess is that this was kind of a phone call where maybe the people from the EU said, hey, we need to put a little bit more pressure on these folks. They're running out of cash. We've got all the cards. They're acting like they've got all the cards, but when they go broke, and go hungry, maybe they'll change their mind about paying us back. But of course, it was already considered junk. Now it is below investment grade, or as I like to say, lower than whale poop. And nothing is lower than whale poop because it sinks to the bottom of the ocean, if I have to explain that joke. Anyway, interesting day out here. And, of course, just a week where you have to say...
It's like I picked the wrong week to quit drinking.
It certainly does. So you can call me at 877-927-6648. That's 877-927-6648. We're going to look at stocks that are moving. Most of them have to do with earnings. We got about 3 minutes in here. Did have somebody email. You can email me at path@tfnn.com, and I'll be glad to get to your email. We've got Harry in Virginia. There's lotions and ointments for that, Mr. Virginia. But I will digress once again. FTR. Frontier Communications, of course, they bought just about everything down here in Florida. I've enjoyed my wonderful FiOS system, and I hope nothing that they do changes it. I've got pretty much super fast business class internet for about, I think they charge me about $80 or $90 a month. And my internet actually is faster than the one in the office over there in Clearwater. So I'm pretty happy with it, especially just for a single person like me at home. But if I'm going to sit behind the computer all day, I don't want to be sitting behind the computer thinking about all this. But I do digress. Yeah, this looks like from the headlines, this is the one that bought all the towers and internet stuff. Harry in Virginia's question is, I'm long FTR, looking to add to my position. Is now a good time in light of the big purchase from Verizon? No. You wanted to have 120 million shares when you broke through the July 29th high. I would put a stop back in this thing before it comes back down too far. I don't think you'd want to see this close below probably 750, and I would certainly be out of this thing if it closed below 724. That major July 29th high needed to be broken with volume, and certainly you had some decent energy out here, but my guess is that July 29th high is probably significant, and you needed to get some energy out here. Did anybody know about this coming into it? Certainly looks like the energy over the last 4 days looks like enough people knew about this before it came out. But, you should have seen this thing hold these highs, and then I maybe would have bought the retrace maybe back down to 735, 725. But I would just hold the position you have, put some stops in, and let it take you out if it does. But I'm bearish on the market, so it's hard for me to get too excited about buying those. David, did you say you were looking for gold $50 lower from here? I've always been wanting to buy it down at $1,000, but there's a good possibility that 1180 was 1183, 1184, something like that, does set up the low in gold. I'm going to have to buy gold first, then I'll buy the gold miners once gold gets back up to a level that can support most of its equipment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to go right to earnings early today, but you can give me a call at 877-927-6648, 877-927-6648. And you can also email me at path@tfnn.com like Harry did, or post a message in the den as other people have. So what else do we have going on out here? Gold, I don't see any other questions out here, so I will move along. Did the BLS forget to count thousands of energy losses? According to CNBC, that was one of the first questions out there today. Yes, that was all the energy jobs. Apparently, what the jobs numbers actually showed was that they didn't instantly fire everybody the 26th. Now, they may have kept them on through the first week, but that's all we know. So the next jobs number that comes out is going to let us know a lot more about what's going on in the economy after the Christmas season. Kind of hard to think that with Amazon now and all the online shopping that we needed to hire a bunch of new retail salespeople. That's their story, and I guess they're sticking to it. So I can understand the skepticism of our government. As long as you're not cynical, you can be skeptical. I think it's fine. Twitter, of course, came out with earnings today, and everybody and their dog was short this thing. And they're driving it home. This is going right back up to the gap down where they had horrible news last time, the 27th of October. 51 million shares or 52 million shares down that day. In fact, 83 million shares on the down day following it on the 28th of November. This thing got smacked. My guess is that hook or crook, and this is why I wouldn't have shorted it. They want Dick Costello's head on a pike. And, you can always move numbers around for a little while. So I suspect that either these numbers are correct and or they are baked or gently roasted. But now, over the next couple of quarters, we're really going to get a much better idea of what Twitter's doing and their income stream. But I think at least his head's off the chopping block for a little bit longer, but not that long. Anyway, decent volume up. It's going to be higher than the volume was down on the October 28th day. It is filling that gap as it should. And the question is, going forward, just how much farther they can go with a model that doesn't quite work yet for revenues on mobile, but getting better. But it is tough. Other stocks of interest is LinkedIn. People have always asked me what I thought of LinkedIn. I always thought it was much better than Facebook, mostly because it's hard to tell exactly what the truth is with Facebook. And you can't really, there's no Dick Costello over at Facebook. It doesn't matter if the stock goes 50 cents. You're not getting Zuckerberg out of there unless he decides himself he wants to leave. He's got every one of the shares of the voting right for 51% of the voting shares. And so there's no getting him out of there. I liked LinkedIn only because the model looks so much better when it comes to figuring out how they make money. It is very clear. It's not changing. I've been very skeptical of Facebook, especially with most of the articles that have been out here lately showing that a lot of their growth is from video and ads running in front of those video on their likes. But those videos are actually being pirated from YouTube contributors. And not that this guy's sitting around, but people that actually have production facilities, do a real show every day, have employees. This isn't just some guy doing something in his basement at night. These are people that have valid businesses on YouTube, and their intellectual property is being snagged. And Facebook basically just drags their feet for 2 or 3 days until everybody's seen it from the likes and it's gone viral. They collect all the cash and then go the other way. LinkedIn doesn't have any problems. They get paid by employers to post ads on their website and have them find the right people. And, of course, everybody gives up all their information these days. I'm not. But it is one of these things where it just, depending on what's going on out there, it looks like a good and decent business. Now, you needed, some fairly decent volume. Let's go back and look at this thing just a little bit longer in the background. But it broke through the December 11, 2013 high at 257.56, 1.6 million shares. You got 5 million shares. Hard to say that this is not a breakout. I certainly do not like the energy on this leg up, but we'll talk more about that when we come back. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we come back, we're up 1 point on the S&P cash, 2.88 billion shares as we start the bottom of the hour. We're going to look at a few more stocks. One of the ones that interests me the most is Yelp. Actually, the earnings look fairly good. They are coming back, though, and filling this gap. And apparently, they said something that someone didn't like. Let me get my notes here. And reported slower user growth is one thing, but also talked to some other people in the Tech Valley last night. And if they would have had that conversation one day earlier, I would have shorted them. But apparently there's Facebook's not the only company with some rather deep problems and maybe with ethics out here, and that is Yelp. And a lot of people have been using Yelp as a giant hammer on businesses. And especially in LA and New York, it's become quite the problem. And that is almost the equivalent of the gangsters coming by and going, hey, you got $10? I'd sit here and watch it so no one throws a brick through your window. Be a shame if someone threw a brick through the window. But if I'm here and you give me $10, it ain't going to happen. there's a lot of that kind of going on inside Yelp. Also, two people saying that if you don't give me, quote, free things or comp my dinner or other things, I've got 100,000 Yelp followers, and everybody and their dog's going to get my Yelp review that says you're crap. There have been some lawsuits about this, but they are getting a little bit more. It's hard to see which one of these things is more important to investors now, but certainly investors are leaving Yelp. This giant gap started in the charts back here on, what is that, 12 million shares, is that it? 12.3 million shares on August 1st of 2014, or is that September, October, November, December? So that'd be 8, 9, 10. Yeah. August 1st of 2013, this thing gapped up. It is now coming back to fill those gaps. And there are 3 gaps back in there. Let me zoom back. Man, one's a kind of a tiny one. We're coming back into this big gap from August 1st. August 1st. But there's there's 2 more little tiny ones. Not a lot of volume there, 1.5 and what do we have here? 2.3. So this one at 12.3 million shares, probably going to act as a fairly long-term support. But another one of these social media companies that may have a problem with its business model in that they have to control their users to make sure that things don't go awry. And there's some balance to the power between individuals and their reviews. But I digress. Another one out here having a nice day is Ubiquity Networks, company that I love their products. This one's been a very hard one to trade and even look at because it's like the one that got away from me. I couldn't, when this thing was $10, I couldn't buy it because there were so many rumors traveling around that I thought maybe there's a little smoke, maybe there's fire, so I didn't end up buying it. Went to $56.85 and tore my soul out with it and then stomped on it. Or as that great country song is, she ripped my heart out and stomped that sucker flat. Well, Ubiquity, UBNT, you did that to me. I don't know if I'll ever be able to forgive you. A wonderful product. I've used them for years. And probably the single best one. Anyway, what I disliked about this is it really hasn't come back and filled this gap. My guess is it's going to continue to do so. But keep an eye on it. Nice pop out here for the day. To it is 3.2 million shares. But giving a great deal of that back, big short squeeze. I suspect that even though things are a little bit better, if the market pulls back at all, just so many of these stocks out here are filling these gaps. So I'm looking at that gap to get filled, which would be about $22.50, $22, probably in that neighborhood to buy it. But nice low energy move back to these lows over the last 2.5 weeks from that 34.87 high of December 18th. But probably with, and as far as this thing's been off this March 21st high of 2014 at $56, probably going to take some consolidation before it gets ready. We talked about Twitter, and so we'll go on to the next one. NXPI out with news, and its news is where? Price target raised from somebody at somewhere, maintaining a strong quarter. So, but I had a feeling that a couple of things going on out here. Of course, this is the company that makes chips for the Apple Pay. And, nice move out here on a day where not much is moving. What I dislike is this has not got a lot of energy into it. 4.5 million shares. Would have liked to seen maybe a little bit more when this thing breaks out to all-time new highs. And we'll see probably over the next couple of days. If this thing would pull back into probably $80 or so, I could see that it's got 3 gaps. It's a smaller version of the 3-gap play that could get filled back all the way to $55. And the question is just whether or not Apple is going to continue to put pressure on them. A lot of these suppliers to Apple is pretty good at turning the screws on them, much like Walmart turning the screws on its suppliers over time. So don't count your chickens before they're hatched on future editions. And that's it. We did LinkedIn. What's Kim out here? Is that actually one we're looking at? Kimco Realty Corporation. I don't know why they're in here, other than they had a big move. Maybe I can find my notes on it. I do not see it. But it is a big move down out here. Now, to really see a lot of these stocks that were in parabolic moves over time, you want to take a look at the 3x3 displaced moving average or a 9-day moving average. But when we look at this one, it has finally closed decidedly under the 3x3. If this thing could close back above it and closes back below it, I'd probably be looking at a lot more realty companies out here. It is not the only one in this REIT space that is showing weakness. Another one that looks very interesting to me out here, and I actually said it in last week's newsletter, there were a whole bunch of articles about political correctness out in Silicon Valley. And I know when they have time to start writing about political correctness and first world problems, why half the world is still looking for some water and a bug to eat, that we're probably spending our time looking at the wrong things, especially in California and San Francisco. If they're crying about something, it's probably got to be rather insane. Anyway, they were crying about something, or rather, I can't even remember now about what it is. But I said, you know what? It's almost time. I think I'm going to about ready to short real estate in San Francisco. I should have thought more about that when I wrote the Tech Insider last week. But certainly down on monstrous volume, if you could get this thing to kind of get back up above that 3x3 and then close below it, I think you could pull the trigger again. I think that these companies have an enormous downside, and here's why. There was a giant deal for startups in Ireland 6 weeks ago, maybe 8 weeks ago, something like that. And I think it was right after Thanksgiving or around Thanksgiving, something like that. And they had almost 7,500 startup companies come to this deal in Ireland. And part of it was to get everybody out of San Francisco, where everybody could mingle. Everybody has like 15-minute meetings and play dates, and everything's so structured. They wanted to get everybody out of San Francisco where they could talk. But where the year before there were about 500 startups that came to this deal, there were 7,500 startups that came to this deal. And they had to go an entire week at the convention hall, and everybody got 1 day to show their wares. Can you imagine being a venture capitalist and even remembering any of the 7,500 companies you looked at during a week? And of course, everybody had their little 10 by 10 booths. But all these folks have some kind of real estate around San Francisco. And my guess is out of those 7,500, there are probably 50 or 70 that have some kind of business idea that's worth being around. What happens when all the rest of those people vamoose? And that was my thought last week in saying short real estate in San Francisco, besides the astronomical high values in the business properties. Maybe the home business stays good because there are a lot of people with a lot of cash in those startups that have gone public. But for me, the idea that 7,500 people showed up, 7,500 different companies showed up, made it very nervous. Anyway, Digital Realty Trust basically is a huge supplier to business locations for startups in Silicon Valley, from what I've read before. And that's why they're called the Digital Realty Trust Company. Again, you can give me a call at 877-927-6648. You can post a message in the den if you want me to, Web Summit occurred in November 2014. I watched pretty much, I think there's a couple hundred videos. I ended up watching maybe 20 or 30 of them. We've got one of the gentlemen, well-respected gentleman, a gentleman and a scholar, John from Philadelphia, posting in the den. But it is it's kind of like when everybody was going public at the dot-com bust. Just that was one of the things that made me think that probably we were very close to some kind of major blow-off top, at least in startups. There just can't be that many good ideas. A lot of ideas, just not that many good ones. But down, big volume out here and a wide price range. Your last major low out here could be looked at March 20th at $48.85. And if we start seeing the market pull back and venture capitalists start to dry their cash up, you would want to be short this a great deal. Ontario Resources had a nice bounce over the last few days. Was up a little bit higher today, but basically got its 50% retracement. And I can't remember why this thing bounced this morning, but I put it on my list. It must not have been important if I don't remember it now. Underperform by Jeffries. So I guess they are either short it or they want to buy it and get it back down. But looks to me like this thing has done a 50% retracement or a little bit more than that. Well, it's certainly up to Confluence. That Confluence zone runs from 40.41 to 42.25, so kind of mushy, but it got right into it. There's probably a better Confluence range, and that would be, if you want to watch this one, up to about $47. And that one would probably be fairly tough to get through for Ontario Resources AR. EPS, that's not one. Expedia. On the brown list today is Expedia. It has come down to its longer-term Confluence level. Let's see if we can clean this up just a little. And that's the one I'm looking for. $70 to about $76.50 is Confluence, and we kind of got into that today. When we look at that, just kind of touched it and brushed it, but this thing had tried to go above, did have some decent volume at the highs, but came off with volume today. The dollar is killing all of these travel companies, and probably some of the reasons we're seeing some issues out here. Well, looks like we've got a little bit of indigestion. And by the way, as a side note and a diversion and a digression, the one thing you don't want to do in space is belch, because there is no gravity. It is no different than throwing up. Just thought I'd pass that along to you. Anyway, we've got some market gas with some gravity. We're back to flat on the day, 2062 on the S&P cash, 3 billion shares. So looks to me like we're going to have a little bit more issue. Dollar printing off at $94.73. I'm looking for $98 on this dollar. And I think today is an excellent example of that. The only thing that kind of interests me out here that probably is telling the wrong story to me is crude up $1.25 at 51.73. We'll be back in a minute. Give me a call, 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Mike in Toronto called, and maybe he can call back if he had a problem with his line. Was looking at the VXX, and probably for a market going sideways, a lot of people are kind of very interested in the movements out here of this market. But kind of probably the most interesting thing to me out here is that if you've been watching options, pretty much from about 11 o'clock on, the big boys of Wall Street have been buying out of the money calls and puts rather wildly and pushing the price up of the VIX. The VIX is the cost of the out of the money puts and calls on the S&P 500. So when you see the VIX, it's not the in the money ones, it's the out of the money ones. So it is basically a snapshot of just pure premium with no intrinsic equity value underneath it. So when we look at it, it was kind of interesting that we saw the VXX actually go right to the confluence numbers, which is very interesting for me anyway. I had a incorrect entry into a VIX trade, got out of it, actually made 50 cents, I think, or 70 cents or something. It was pretty minor. Could have made a little bit more, but since I was on the wrong side of the trade, just decided to get out. Thought that was the prudent thing to do, and then buy on this pullback that we've had over the last few days. But this thing went right to a very good-looking confluence level on the VIX. It has pulled back, but it looks to me like this is certainly something that is going up in price, not down, especially when you look at a market that is going sideways out here to the greatest extent. To see the big men of Wall Street, this isn't chump retail investors buying one or two puts out here. This is, I saw some big ones fly by earlier in the day, and that tells me that they were firing for effect. They were more afraid that the price would go up significantly before they got in. They were willing to buy them up, and that's got to be one of the things that you look at. We're off 2 points on the S&P cash, 3 billion shares, but I don't know what his question was other than bouncing off the VIX, but I think I'm bearish, and I haven't changed my mind on it. And it certainly looks like the big men of Wall Street are buying out of the money calls or puts. And I'll go through the data tonight and look at it. But my guess is that they were buying puts because the market was going sideways. And as soon as they started hammering those out of the money puts, and I started on the S&P 500, we saw the market really start to move. Now, part of that may be, of course, the Greek downgrade, because it was kind of close in the same time area that the S&P downgraded it. But I don't think that Greek news is news anymore. I think it's dyed in the wool. They're leaving the EU. We're probably going to see some more countries do that and follow them down the yellow brick road. But kind of hard to see anything else. Anyway, if there was one thing I would say watch right now, that is that dollar index. We are at pretty much the highs of the day. I don't see this pulling back. Again, I think we've had our pullback in the dollar, and I'm looking for it to go to $98. And, we want to be watching that probably gold to confirm that over the next few days. In the meantime, so when you can, not when you have to. We'll see you Monday, same bat channel, same bat time. Unless we see you first in the second hour of the Tom O'Brien Show when we talk technology. So catch me there if you can. Bye.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.